Hi everyone and welcome to Trades of the Week with myself and Keith Sullivan. And today he does not have a stool, which is very exciting. But he looks very handsome, just as usual. And today we're going to speak about a few very exciting topics as usual. We're going to be speaking about what has happened to, among others, Voyager. Why have they declared bankruptcy and what does that mean for the markets? And not only that, we're also going to talk about why Ethereum went up. I think it was a good 17% or so, like 10% yesterday. And are the markets recovering or is it just a dead cat bounce? In today's video, you will find out. And before we dive into the content today, I do want to mention something very exciting. We have a $30,000, is it pound or dollar? Pound giveaway. That's what we have. And that's going to be divided among 5 participants. So make sure you use the link below to register to win one of the amazing prizes we have. For example, one of the prizes is a one-to-one with one of us trader coaches so we can support you in your journey to financial success. And we also have other amazing gifts and prizes, such as the courses we have, so you can learn and get that financial education to start your journey to becoming a successful investor and trader. So make sure you use the link in the description and sign up now. All right, so let's dive into it. So let's start with our amazing buffaloes, the strategy that doesn't require a specific market. The market can go up, the market can go down, it doesn't really matter. And sometimes the buffaloes are moving a bit slower, as it is in this case. So the first one is ACI, and we're currently in a slight loss there. It is flirting with our stop loss, so we'll see if we get a 1% loss there or if it recovers. Do your research, because you do have the opportunity to get in at a better price than we have. And secondly, we want to have a look at NVEE, NV5 Global Inc. We're currently in a good profit here. We moved the stop loss to a 1% profit, which it does seem it's triggered, Keith.
Yes, it did actually. It got triggered the other day.
Yeah, it did. But I actually think the case here actually is that we actually have moved it now, right? So it has consolidated and then moved to the upside. It tricked Keith there a little bit.
See, yeah? That's where we go now. Tricks.
A little bit. But we moved the stop loss, so we are locking in 1% profit here. So worst comes to worst, it might go down, take us out at a 1% profit, which is going to be awesome. But there's no moving today. No profit there. Okay. So he got very excited. And the next one is, PAYX. We are in a slight loss on that one. So currently you can get in at a better position than we are if you do your research and like this one as well. Next up is AL or Alnylam Pharmaceuticals. And we got stopped out at break even. Do we have a sound for that?
Boo!
Is that a boo?
Yeah, but you didn't make money. It's risk-free.
Yeah, well, okay, fine. Yeah, no money made, but we are out of this trade now, which is very unfortunate because it just came up, took us out at the stop loss at break even, and then came down again. So if you didn't move your stop loss, you would actually be up roughly 1% at the moment. So that is the nature of the market, but no emotions. Very important. So before we dive into the 2 new ones, what is happening in the market, Keith? What can we expect?
Oh, so that's a great question. And once again, still haven't got that crystal ball. We need to talk to Amazon. Maybe that's why the share price dropped, because they haven't delivered our crystal ball. That is very true. Maybe. Now, in regards to the economy, we are still in the same phase. As we spoke about last week, we had one of the major news announcements, which was CPI, which basically shows us inflation in the US. And that has actually increased to 9.1%. So that's increased 0.6% month on month, which is showing us that inflation is still increasing. Now, what does that mean? When you look at the CPI, there is some lagging indicators. Okay, so it's not as bad as it may look. The lagging indicators could take 3 months, and a lot of that is the property side. So it could take about 3 months to come into the CPI and show inflation actually falling. But with the Federal Reserve, they are probably going to now start looking at the increase in interest rates. Now, they looked at a 75 to 100 basis points. They are probably going to push more to the 100 basis points because the inflation is still increasing. So they really need to combat that. So that's the first point of news. The second point of news that we were looking at is consumer spending. Consumer spending is actually stabled and actually increased slightly month on month. Now, what does that mean? Does that mean more people are spending into the economy? Possibly not. It might just mean that it's costing more for the goods and services because of inflation. So they might be buying exactly the same amount, but it's costing them more. So they could be buying, 1 gallon of petrol, and it could be costing them 1.5 gallons, for example. So we have to take it with a pinch of salt. The way that we can look at the consumer spending is also looking at the debt that they are short-term accumulating. And if short-term debt is accumulating, that's basically showing that they're taking money from the banks, accumulating debt, putting it back so they could buy goods and services, which then in our turn means they're going to be paying more on interest rates, and actually it's negative for them. So that's the kind of balancing that we've got. Now, overall, the biggest announcement that's going to come out is the GDP. And that is going to confirm or deny if we are now in a recession in the US. Now, for me, I'm not gonna sugarcoat it. I think the US has been in recession for a few months now, but we will get that confirmation over the next few weeks once the GDP announcement has been released. So what does this all mean? And we always ask ourselves the question, so what? So what? We know this announcement, so what? What does this mean for us? Number one, there has been a short-term push up. That's natural. In a bear market, what happens? Market falls, retraces, falls, retraces. We're going to see these short-term relief rallies. But longer term, I'm expecting a bit more of a further drop in the market. With the inflation coupled with Q2 earnings, I am expecting our major markets to fall a bit further. Now, that just means you need to follow the FCA strategy, be liquid enough. Number one rule, when you are investing, be liquid. Be able to invest as that market drops. Because if you can only invest at maybe 20 and 30%, but the market goes down to 70, your average cost is all the way up at the 20% drop near enough. So let's make sure you're liquid enough to invest as that market drops, and buy the best companies. Hedge against the market. Find the companies which we believe may recover quicker. Okay, you might see your Johnson & Johnson, your Procter & Gamble, your Unilever, these type of companies which basically sell on a daily basis, your Coca-Cola, your McDonald's. Okay, they are not bound by inflation. People are still going to spend money there because they need to. So let's just see what is the hedge, but make sure you invest into the strongest companies possible. You don't want to be investing into weak companies right now, especially when the bear market is happening. Because remember, I think it's Warren Buffett said it correctly, when the tide comes out, we're going to see who's swimming naked. And that is so true. Once we see a bear market hit, we're going to see the companies that are not going to survive. So just protect yourself, get into the strongest blue chip companies, and leverage us. We do the research for you, leverage what we do on Trades of the Week, and follow that suit. Overall, Dennis, not much more to add there.
Well, not that we're giving any advice,
of course.
Do your research, all right? This is just what we're doing. And what I think as well, I mean, I saw inflation firsthand, right? I was at the airport in Spain. And I was going to buy a Toblerone, not for myself, I don't eat that. Well, actually it was. But I didn't buy it because one small one was 10 euros. I mean, holy guacamole, it was insane. So I saw it firsthand. So no Toblerone, I'm not going to buy the Toblerone companies.
Is that because of the price or because it's sugar? Which
Both.
One? Both?
Well,
I think it's more price.
I think it's price. It's crazy. But that being said, right, it's like Keith said, I think from 2008, they've printed more than 45% of the total money supply that we have now. And that will have side effects, all right? And that's all what we're seeing now. It's not really a surprise. It just, when is it going to happen? I mean, no one really knows how far they can drag things. But inflation is a natural side effect of that, which is why we are always diversifying into other assets as well. So like Keith said, it's important to do your research. And one thing that we're doing is that we are absolutely having a trading account. Why? Because we always have a 1% stop loss, which means, okay, let's say we have a stock market crash. Well, worst comes to worst, we might make some profits on the downward trending ones. We stopped out on the long ones, but we have cash. We have cash to invest into the solid companies when Apple is down 40, 50, 60, 70%, and these other companies that we think are awesome. And that will be the time when you actually make the money, when you are able to buy these companies at that low price, because then when it goes up, of course, you make so much more. So patience is very important. Money will always, also a famous quote actually from, I think, Warren Buffett, and money will always move from the impatient to the patient. That being said, let's look at the two buffaloes for this week.
Yes, it's time for another of our amazing crypto giveaways. Now this time we are giving away more than £30,000 worth in prizes. and there will be 5 lucky winners, not just one, 5, each receiving an incredible prize package worth more than £6,000. Now this might sound like a joke. Have we gone mad? No, we're 100% serious, and by July the 31st, 5 lucky people selected at random will be enjoying these fabulous giveaway prize packages. Now each package includes a one-on-one coaching session with one of our traders, £500 for you to trade cryptos with, a financial strategy call with our newly announced CEO, John Castro, and a 1-year access to your crypto club, which includes hundreds of training videos, webinars, Q&As, and much more. Plus, a whole raft of IM merch, including books, hoodies, and they are amazing, I love them, mugs, mouse mats, and so forth. And all you have to do to be in with a chance of winning our phenomenal prize package is simply just click the link, so we can verify that you have done the following. Now I repeat, you must click the link to take the following actions. You need to subscribe to our YouTube channel, like the video, leave a comment saying done when you've completed these steps. Really, really simple. And for a bonus chance to win, join our exclusive private Facebook group, which you should be doing anyway. Now each entry is worth 5 points. The more actions you take, the higher the points you will receive. And that's it. No strings, no small print, no chicanery, no dodgy Dogecoin, unless you really want some when you win. You can enter right now by clicking the link below. Now you must click the link to enter. Make no mistake about it. This is a potentially life-changing moment for you because our prizes are basically everything you need to get started with crypto trading and, more importantly, training. It all starts with education. And this giveaway, worth a cool £6,000 plus each, is the perfect way to make a start. What have you got to lose? Oh, nothing. Just the chance to win. So, click on the link to earn some points. Remember, there's 5 people, not just one. Okay, so you have a great chance of winning. And look forward to July the 31st when you will find out if you are one of our 5 lucky winners. We can't wait to reveal all in just a few weeks' time. See you then.
Mm-hmm. So we have builders first source first and foremost. We have a nice reversal candle just on the trend line here. Looks awesome. Be wary of earnings though, that is coming up. But I think we do have time. So this is number 1 to have a look at. So I think we have a great risk-reward ratio in there as well. I like the fact that we're getting lower highs and lower lows continuously, which is always a good sign. Secondly, we're looking here at Corona Therapeutics and also another short because we've seen a little bit of a rally, could of course continue, and we are in a couple of long positions. We're adding 2 shorts this week. Nice red reversal candle, and we're actually in this, or well, actually you could be in this now if you did it on yesterday's candle. Otherwise, we will still get a good reward risk ratio calculated on today's candle as well. So I think we can adjust it so it will represent what everyone else would be doing here. So it will even be lower than that, I think. So and that's a little bit more advanced, right? You see there's a small consolidation there. So if it were to break below this small consolidation we're seeing at the moment, then that increases the probabilities. So we're also doing this a bit more advanced. So that's really the stock market update, but of course that ripples over into cryptos as well. And like we said, diversification is key when you are trading and investing. So Bitcoin, for example, if we go along here, we have seen a small breakout yesterday. Woohoo, right? It's going up, which is great. And what we're seeing in the market here is that 80% of the so-called total US denominated wealth, which is really money invested into Bitcoin, that has been dormant or laying still now for over 3 months. And in the previous bear markets, what that have meant is that we have seen an end of a bear market or end of a drop at least. So which is why we might be seeing a rally now in the market, which might, by the way, go up higher. Keith Crystal Ball says roughly 29, 30,000.
29, well, you could be looking at this consolidation up here. So worst case 29, best case 32, give or take. And then we could potentially see it break higher. If it breaks higher than that, then we're going to start targeting the lower highs here. But if it recovers up to this point and then breaks lower, then we could just expect, a bit more of a further drop, which is great for us, by the way, because we're still able to invest and bring our average cost down.
Exactly. So, but hold the horses. I think eventually we'll absolutely revisit the 67, 90,000 or 67, 69,000. Yeah. But for now, we just need to wait, right? It's just one step at a time. So, what we will start to see, as you can see on the drawing here, we hopefully can see higher highs and higher lows when the price is getting higher. And as long as it keeps doing that, well, who knows? The price might go to 100,000, but we're going to keep following the price action, which is key. And if you want to have those updates and see exactly what we're doing, make sure you do follow Trades of the Week every single week. And comment below, where do you think Bitcoin will go? Do you think we have a rally now where it's going to take it to 30,000 as Keith, the crystal ball man? Or do you think it's going to go higher, lower? What are your thoughts? And what are you doing now? Are you buying now as well? That is a great question. So speaking about this as well, what is going to happen in the market and so what, right? We don't know what's going to happen in the shorter term. We're not here to try to catch the shorter term moves. We're here to build wealth longer term, and we hope you are as well. And with that being said, right, we're utilizing the strategies as Keith said. So if it falls more, we're going to enter again and again and again and again until it finally turns, as exactly what happened in 2018, 2020 when the market fell down, and then we were very happy in 2022 where it went from 3,000 up to 67,000 or so. But what are we doing? Okay, so Ethereum, if we can have a look at Ethereum here, Ethereum actually went up a good 10% and outperformed Bitcoin, really had a good rally the last couple of days. And great that we got in at an 80% drop, because now it's up quite a bit actually. So maybe it's finally soon time to move actually.
Hopefully.
And it's up a bit more. But that being said, they're actually launching, I think it is the 19th of September, they're launching the upgrade to Ethereum 2.0. And it could be postponed, no one knows. But hopefully that will happen, and that might trigger a new rally in the entire market, because that's how important Ethereum is as a player. So we'll see, right? But in order for you to invest at the lows here, you need to utilize a strategy. We believe the CCA, small cap strategies, are the best ones to do so, because then you plan ahead and invest all the way down. And what else are we doing? Well, Solana, we spoke about that last week, and Solana has also rallied. There are rumors, might be a lawsuit, etc., but they're just rumors for now, nothing we can confirm. They did take a little bit of a hit, but looking at the price action, it seems like people are still very positive when it comes to Solana, and they are building a great ecosystem. But one thing to keep in mind is that when it comes to cryptos, it's a lot of trial and error, right? We saw Celsius went belly up, right? And we saw Luna, another exciting project we were really positive about, but that was also a failed project. And we'll see that. It was the exact same that happened during the internet or .com bubble. The same thing. It's a bit trial and error, but winning will be the projects that creates the internet 2.0, money 2.0, everything we're seeing today 2.0, to make the world more efficient, cheaper, faster, and more efficient as well. So that's what we're seeing, and that's what we're betting on. But that being said, asset allocation is crucial. Are you mortgaging your house and putting everything into cryptos?
No, of course not. Of course not. Unless I put it all into XRP.
Exactly, XRP. But right, so all jokes aside, we only do 15-20% of our net worth. So whatever you're investing into stocks, into real estate, property, or whatever, right? 20%, 15 to 20%, that's it, because that's how risky the market is currently. Very important. So we're not really investing into anything new at the moment. What we are doing, on the other hand, is we are reiterating and getting into our positions a little bit more. So that was the likes of Bitcoin, Solana, and Ethereum. We have Atom as well. The big ones, maybe even Decentraland might be one to look at. You have that third from the low there, which is one of the big metaverses. Maybe it's not the one that's going to succeed, maybe it is. But being down 90-odd%, we made 500% of that going up. So being down 85% could be a great entry point. Now is not the time to sell. Now, if you believe in cryptos, is the time to buy. And you can say, well, Dennis and Keith, I can't put all my money into Decentraland. That's crazy. No, exactly. Maybe you can put in 20 pounds, maybe 30 pounds, maybe 50 pounds, right? Because that could 10x in the next bull market, and then that's how you start building your wealth longer term. So you can only lose what you can invest, right? That's how simple it is. So that being said, I think that's really the crypto update, unless you have anything more exciting to to add, except for the fear and greed maybe?
Yeah, so the fear and greed in regards to crypto, we've been in extreme fear yesterday, last week extreme fear, but we're actually now going back into fear. So there's a bit more positivity coming back into the market. A bit of good news is Binance actually overtook Coinbase in regards to the amount of Bitcoin they hold. So Binance are looking like they're accumulating more Bitcoin, which is great. But the main thing about crypto right now is let's not get ahead of ourselves. We just want to make sure that we are following the strategy. It's so easy to know how to get into the market. Everyone knows how to get in, but it's also hard enough to get out of the market because emotions play a massive part. So make sure you follow the rules when it comes to getting out of the market. We can move all together, but you need to start taking profits, because if you looked at Mana, for example, and it went up 500%, you didn't take no money on the uprise, and then it's down all the way low to where you near enough entered, then that's a struggle for you. So make sure you are taking profits as that market goes up. But yeah, I'm looking forward to crypto.
Yeah, and we're going to leave you with this. People were very happy to buy Bitcoin at 60, 65,000, but now they're nowhere to be seen.
Yeah.
Think about that, right? It's now at 20,000. Now is really the time to buy, not at 60,000. That's the time when we sell and take profits. All right, so lastly, but no means least, we're going to look at the quality companies that we are investing into. And I don't think there's any real updates. It's just been moving sideways. It has recovered a little bit. So with the crypto market, stocks has also recovered a little bit, but not enough for us to take profit. So look over your good positions here as well. But the one we're adding this week is Lois Companies. And the reason we're adding that is because it's an American retail company that specializes in home improvement. Now, why is that? Well, we like this company for many reasons. One, it's down 28%, great entry point, good fundamentals. But also, people are working more from home. I had my I don't know what it's called, my aunt, actually. She works for well, these are very difficult words in English, for the government in Sweden. And they were on a trip to Brussels, and there were no people. They have a giant office, like you can imagine. There were no people in the office. And she said, well, they're on a holiday. No, they're actually working from home. And I think this is a theme all around the world. We'll see more and more people working from home. And you can maybe look at your own job, right? And your own office. Maybe people are working 2-3 days from home, 2 days in the office. So for home improvement, people are going to spend more time at home. So we think that's natural, that this will have a good future.
100%.
Yeah, very good. So this is the one we're adding this week. It's Low, so Lois Company. So that being said, comment below, what are you doing in these times? Everyone's out there, they're fearful, right? They don't know what to do. It's all in here. It's all in your mindset. What are you doing now when everyone else is panicking out there? Well, are you buying or are you also panicking? So comment below, what are you doing and what support are you looking for? So before we go into and round this session up, we need to look at the results as well. And there's not a lot to say this week, right? Because the results are the same as before. But that being said, up 63% on Buffalo when the whole market is down 30% or so. It is still quite good, even though it is from August 2020. So roughly in 2 years soon. So that's roughly 30% a year, which is actually really good, right? And that's something that you can achieve as well, right? That's just true. And with the VCA, CCA and small cap, we are down, right? I'm gonna say that we're down on our entire portfolio, and because of course the market is down. We've been reinvesting, so we've been accumulating more and more, but these are closed positions, and you could have banked those. If you did this as well, you could have taken them out, put them into other assets. You could have done that. So these are banked profits, but now overall on our portfolios we're down because of the market is down as well, which could change in a week or so. So that being said, right, this was Trades of the Week for this week. These are the results, and I hope you find great value in watching these. And make sure you tune in every single time to get the latest updates, what we're doing and how we can support you. And don't forget to subscribe if you enjoy these. Press that like button, subscribe, and press the alarm bell to make sure you get the notifications whenever we're doing these sessions, so you will be the first to see what to do and when to do it. So that being said, from myself and Keith and the whole team, we wish you an amazing week, and we can't wait to see you next week on Trades of the Week.